Hello there, this is Frank Ochoa with your premium educational video here. This one is dealing with buy imbalances that were forced to sell and liquidate, which basically were the ends of those up moves, and how these buy imbalances were able to help you pinpoint the point at which the bulls were beginning to lose control and they were being absorbed by larger passive sellers. It's very, very simple to see in the footprint, but I wanted to show you what it looks like first in the actual candle bar charts here. And basically, here are the highs of the day. So here's how price rallied throughout the session, quietly. We knew after Monday's big expansive down day, we were likely going to see a sideways to up day today. That's what we got. Additionally, we know that when you have that type of day, you're going to fall shy usually of your typical primary 75% target, which in this case was 1755s. We got 6 ticks off that primary target of the day, and that's how I knew that was probably going to be the high of the session. We also had bearish divergence off the highs here, and one thing was we had a buy imbalance right here off these highs. Right afterwards, it was hit with an aggressive sell with large volume, and then from there, let me bring this up a little bit. Price drops, forms a lower high here, and drops again. So this is the first major selling we'd seen since we'd broken to new highs during the session. New highs were above 1748s. So we sold off quite a bit back to VWAP. Well, price rallies back up to 51s here, and that was where that prior rejection point was on the lower high, and traded back there twice more. 3 times being rejected off that area, with each subsequent time leading to a bigger move than the last. So this zone right here became a very clear zone to watch, and it all unfolded clearly on the footprint. So let's take a look at the footprint chart now. Here is the footprint chart, and this shows just a basic delta differential between volume that's coming through on the bid versus the offer. A buy side imbalance here shows you that there was more buyers that were lifting the offer here than there were sellers hitting the bid. Anytime you have a buy side delta like that, price should go higher. If it doesn't, it means those are trapped buyers and you're likely going to see a sell. So that's what happened. These are the highs of the day. 1753, here's 53 half. Boom, 3,000, 3,100 buy side imbalance. You get another 2 imbalances here, 700, 800, and can't get price to go bid. Instead, boom, 1,350 sell side imbalance hits it, and then price drops from there. When price returns, look at the buy side imbalance that occurs right here. 744, 947, 600, 1,075, and price couldn't go bid on that. That tells you right there were larger passive sellers with limit orders absorbing that volume, which eventually triggers an opposite reaction, because these buys that came in, aggressive buyers that came in, they hit a market order to get in the trade, and then they're immediately underwater because price goes offer. On that size, you're going to run out of your trade, and that's how you get the movement downward. These are sell stops being hit as price is triggered against them. So now we come down to VWAP here, and price pushes back up. Now this is a return trip to 51s. Now this is when we hit 51. The reason I'm saying 51 is because in that prior period of time here, we topped out at 53, we dropped, we came back to 51, put in a lower high in that zone, and then sold off. So now this is our next return trip to 51. You're watching it to see what happens with any potential imbalances, good or bad, because it really doesn't matter. You just want to see something stamped that will tell you which way price is likely headed. And in this case, right here, you see the sell imbalances pile on, you see buy imbalances, they get ignored, and you see price push downward. That's your first sign right there. And then right here, look at all these sell imbalances that come in. So now you have these sell imbalances and you have these that have just come in the market. This looks like, you know, it's ready to push downward, but it doesn't. So at that point, you start to think, okay, these sell orders right here, they got short big time contracts, price is going against them, and they couldn't get price to go down. At that point, you're thinking short squeeze. Okay, this is likely to squeeze higher now. because you trapped a bunch of sells. We've been in an uptrend. We're probably going to take out 51s now. So price goes a little higher and then boom, drops back down. So 51s go offer. Price tries to come back up again, and there it is. More get trapped down here on the buy side, on the sell side. And when price pops up, 1970 right here, a big fat 1970 delta. That tells you right there price should go bid and go higher. And let's see what happens. Boom, immediately goes offer, pushes downward. That is not good. And that is the beginning of a collection of buy imbalances that form at the highs. So right here, look at all these buy imbalances that form at the highs. Green, 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 green. And yet price wasn't able to go higher. So at this point, the shorts right here came in. They couldn't get it to go down, but the larger passive sellers up here continued to absorb. And at that moment, the short squeeze failed, and instead the longs had to liquidate, and that's when you see a sell-off. That was a huge sell-off here from 51s and dropped this thing all the way down to 43. So it was an 8-point drop, just like that. Beautiful. So now price comes back up to 1751. Here it is, return flight. Back to 51 for a retest, and look at how bullish it is. Look at the buy-side deltas. These buy imbalances right here, price should go up. What happens? Ooh, price goes offer instead. Again, remember, you have 3,100 contracts that bought on the ask right here, right on the offer, trying to lift the offer. You had 300 here, buy side imbalance, 800, 1,100. 300, 400, 200, all of these are buy side, and price does not go bid. Still being absorbed at 51s, still getting absorbed at 51s, even if you go to the right. Absorbed 32.82, absorbed 15.50, and everything below it. There was a large, big-time fish that was in on those 51s, absorbing everything for 3 distinct tests going backward. Right here off 51. Absorbed, 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 each time smacking them down. So now what happens? Well, price is getting absorbed. You see the buy side imbalances right here, and yet price isn't going higher. What do? You lean on these trades and go short here. Because if they go higher and they push higher, they're going to go bid, and at that point you have a small stop loss, right? But this is the earliest point. Price right here can't go higher despite the huge buy side imbalances. And then what happens? Well, if you can't get them to go higher again and again and again, you're going to get a sell-off. Look at the sell-off here. Boom, boom, boom. And we sold off all the way back to 43 again. So this shows clearly how the footprint can come in handy on the top side here. If you see all these greens on the top and price isn't going up, that tells you that they're being absorbed. And those buyers can't get price to go bid, so price is likely going to go down as these buyers start jumping ship and selling their positions. So that's the footprint there when buy side imbalances are forced to liquidate.